All right, welcome everyone. This is Mark Dannenberg, and welcome to our Profit Builders Q&A session. I do these periodically just to kind of give you a chance to ask some questions that may come to you as you're just really learning how to trade this program. And I find that it's valuable because if you ask the question and everybody hears the answer, then I only have to answer the question once generally. And generally, if you have a question, there are other people who have the same question. We try to cover extensively the types of questions that we anticipate in our daily updates and daily reviews. The whole program is designed so that you learn how to trade this method over a 6-month period. And that's through the daily updates 5 days a week, with the exception of a holiday. But generally 5 days a week, every market day for 6 months. So I have one thing I want to talk about this morning, or today, before we get started on the Q&A. And this will probably answer several of the questions that are already pending out there. So I'm going to talk about the fact that we have now completed our first quarter of trading on the Profit Builder program. Now, some of you might have joined partway into the quarter, so you don't have a full quarter behind you. That's okay. My suggestion is you kind of draw a line in the sand and say, it's the end of the quarter that you started in, and now you trade a full quarter based on July 1st through September. So this program is designed to start with a trading balance of $5,000. That's not starting with an account size of $5,000. It's starting with a trading balance of $5,000. Your account size could be $100,000. It could be $40,000. It could be $10,000. But whatever it is, the whole purpose of this program is to start small and grow big. Start with a small amount of risk commitment. My definition of small is $5,000. If you want to start smaller than that, then you can do that. You can tailor this program to starting smaller than a $5,000 capital commitment. So we start small, and then we compound our profits throughout the quarter. At the beginning of the new quarter, we want to reset our investment commitment. I don't want to reset it back to 5,000. I want to set it to 5,000 plus some portion, some percentage of the profits that we accumulated in the prior quarter. Now, when you join the program, you were given a spreadsheet. Whether or not you choose to use the spreadsheet is entirely up to you. And I think we've said to you on multiple occasions, we don't actually provide support or discuss how the spreadsheet is constructed. If you want to change it, be my guest. If you want to do it differently, please go ahead and do so. If you don't know how to use Excel, we can't provide support on that. We just know how to use it. We're not really good at teaching Excel. But we use it as a very, very simple tool for us to just track week-to-week profits. And we're using it as a tool, a very simple tool, to project profits going forward. So I'm going to spend just a few minutes. I'm going to talk about the spreadsheet, and I'm going to talk about our returns. And I'm going to talk about how we're resetting the starting balance for the new quarter. And I'm going to talk about how we're going to communicate a number of contracts on trade alerts, because if you were in for the entire quarter, you're going to most likely be well ahead of somebody who started 2 weeks ago. Or if somebody starts in a couple of weeks, then they won't have had the benefit of profits in the prior quarter. So just in kind of an overview, we've talked about this a little bit before, but we have completed the quarter. So the week that's highlighted in blue is the last week that we report for that particular quarter. We started with an allocation of $5,000. Now, in this particular account that I go through with you every day on the daily updates, the live balance was $11,000 at the beginning of the quarter. And that doesn't mean that we're going to trade 11,000. We carved out 5,000 of that amount and said we're willing to put at risk $5,000. That doesn't mean it's $5,000 in one position. We generally have in play somewhere between, I'm going to say, 3 to 5 positions. When you're just starting out with 5,000, it might be more like 2 to 4 positions. But as you're growing your account, then it might be more like 3 to 5 positions, and it might grow beyond that as we continue to grow. So there are a few key points, and I'm recording this, and Dorothy's going to send it out to everybody so you can replay it. But there are a few key points that I want you to understand about this concept of compounding. First of all, don't get so fixated on the digital accuracy of the numbers, okay? This is just kind of directionally based. It's giving you a guide to say, okay, listen, if we started with 5,000 and we earned X% roughly per week, and we project that out over the course of the quarter, I can see on a weekly basis what type of profit target I have. I know that on a week-to-week basis, I'm going to have a certain target. That doesn't drive me. That just gives me guidance to say if I keep doing what I'm doing and continue to take profits as they make sense and adjust positions as it makes sense and take losses when it makes sense, then it's reasonable to think that I could probably earn somewhere around that profit target. But at the end of the day, folks, and this is very, very important, the only number that really matters, the report card on how you're doing, is this number right here, your actual profits. And if your actual profits some weeks exceed what you anticipated, and if your actual performance for the week some weeks is actually a loss, and so you missed your target, you need to look at this as a, oh well, it's all about the big picture. It's about the macro picture. It's not about what's going on individually. Don't get obsessed with each position. Just manage and monitor your positions as you've been taught. As you're learning to do that, you're going to find that there's this flow. Sometimes the flow means that you've got to pay out a little bit in order to keep the flow going. And other times it means that you're going to take in a windfall, and that's going to keep the flow going. So the only number that really matters, in my opinion, the only thing that really is your ultimate report card is this number right here. And on a weekly basis, I plug this number in. On a weekly basis, I go to my trading platform and I pull up performance, and here, let's do this. I'm going to click today. I'm going to go to a range. I'm going to go to the first week that we started. Let me just verify that was the first week that we started. Week of 323. So these week numbers are always Mondays. Week of 323 through Friday, Saturday, doesn't matter, Saturday the 28th, okay? $652.80. Now that's after fees and commissions. That's the number that I grab. I don't overstate my returns. I don't overstate my profits. This is pure, true net profit to me after I have paid my fees and commissions. There you go, $652.80. That's what I plug in to that column. That's as simple as this is. Remember, folks, this whole program is designed with a theme of simplicity. I don't want it to be complicated. I don't want it to be head scratching. I don't want it to be confusing. I don't want it to be a huge amount of work. I'm not interested in tracking every single trade, performance on every single trade. I personally am not interested. I don't care about win-loss ratio, which so many people measure. I don't care, because at the end of the day, all I care about is actually the end of the week. So there you go. That's as simple as it gets. I plug those in, and now we're at the end of the quarter. Spreadsheet's going to calculate for me what my quarter-to-date profits are. I'm accumulating those as I go. You know, I had a loss the week of May 4th. It was due to some rollouts. I had a loss the week of May 18th. It's due to some other rollouts and management. Had a loss the week of 6/15. Okay, so out of the quarter, we had 3 weeks that we reported a loss. All the other weeks were wins, but at the end of the quarter, all that matters is our ultimate profit, our report card. So we finished our first quarter of the Profit Builder program, having generated a profit of $6,396. $6,396 of profit. We started with $5,000, and each time we took profits, we added that profit to our base, and we were willing to invest that amount. There were many times that we did not actually have the full amount invested, but it doesn't always limit us from being able to take the profits. You see, this whole calculation isn't trying to force me to tell the market what to do. This calculation is simply saying, if I could make $665 this particular week, then I know I'm on pace to have a pretty decent quarter. And you're going to have some weeks that you're going to exceed your profit target, and you're going to have other weeks where you're going to have a loss. Okay? So that's the current quarter. And we ended up 127.9% for the quarter, based on a $5,000 starting balance. We didn't always have $5,000 in play. We had a few times where we were a few $100s over our allocated amount, but we're not fixed on, I have to only have 78.91 in play, or I have to have the full 78.91 in play, whatever week it is. If I came down to week of 525, I don't need to be obsessed to have $8,715 in play. That's not the objective. It's more of a guideline than it is an absolute. More importantly is, okay, if I have that much in play, I could possibly earn $697 based on what we've been doing. But if I can earn $697 without having that in play, great. And the extent to which you have a specific amount in play is going to vary depending on whether you have credit spreads or iron condors. If you have iron condors in play, you have less risk in play, but you have a greater amount of profit potential. All right, so now we come to starting a new quarter. Now, the whole objective of this program is to say, now we're going to set aside a portion of our accumulated profits so that we have no risk on that portion. And we're going to take another portion of our accumulated profits, and we're going to add it to the $5,000 that we started with, and we're going to start over the new quarter with a new amount. Now, this is where each of you must make a decision personally as a trader. If you were in the whole quarter, whatever portion of the quarter you were in, you have to decide what percentage of that total amount you want to reinvest. Now, I would advise you against making it 100% allocation, because eventually you're just going to grow to a point where you're putting everything you have at risk all the time, and that doesn't make sense. Doing it on a quarter by quarter basis kind of breaks it up, and it sets aside profits that you've accumulated, and it puts it into your bank with no risk. I have chosen in this particular account, and I trade this program across multiple accounts, but I've chosen to take 40% of the prior quarter's profits and allocate it to my investment commitment for the new quarter. So my spreadsheet's doing the calculation. You can certainly do the manual calculation if you prefer, but that's basically saying that this week, I'm willing to have as much as $7,558 of capital risk. I'm willing to have that much at risk. That is $5,000 plus 40% of 63.96. And that will get me a investment capital allocation of $7,558. That's how much I'm willing to put into play. And of course, my profits then are defined for me throughout the quarter if I'm lucky enough to achieve those profits every week. But the reality is there are going to be some weeks we're going to do better than that. There's some weeks we're going to do less than that. And there are going to be some weeks most likely that we're going to report a loss. The losses mostly are due to rollouts and repositions that is then that then comes back to us in a future week. So that's as simple as it is, folks. I'm not making this complicated at all. If you're using a legal pad, or you're using a spreadsheet, or you're a programmer and you've designed your own way of doing this, it doesn't matter how you do it. And I don't really have a preference. All I'm telling you is this is what we are going to do right here. I'm going to take 40% of last quarter's profits. I'm going to allocate it to the next quarter plus the $5,000. So my new starting balance is $75.58. Now, I'm using a projection of 8% per week. That's a little lighter than what we're doing in most of our accounts, but I want to just make this statement to you that this program is designed to teach you. It's designed to teach you how to think like a trader. If all you ever use the program for is to follow our alerts and you don't pay any attention to learning, you will still probably make money. But your earnings will be greater without ever increasing your risk. Your earnings will be greater as you learn, because we are influenced sometimes on when we send out an alert based on whether or not we think that you have an opportunity to actually execute that alert. For example, there are other accounts I trade where at 10 minutes before the market close, I see an opportunity to go ahead and grab a profit, and I may do that. But I would never do that for you guys because I can't get the alert out and anticipate that you could respond in time to be able to take advantage of that opportunity. And perhaps that opportunity is there the next day, and perhaps it isn't. So it's somewhat different when you're just purely following the alerts. The alerts are intended to teach you what we're doing. The daily updates are intended to teach you how to think about what we're doing. And the 6-month time frame is intended to give you time to start to get comfortable with it. Now, maybe you're not ready to go completely on your own after 6 months. That's fine. You can follow along with this as long as you want to, and you'll still make some money. But I think that 127.9% for a quarter, given that sometimes we don't send the alert or we don't take action right away because we don't want to leave you hanging, I think that's still a pretty good result. And if you can improve that result simply by trading more independently, then there's just upside potential. So just to give you a little food for thought, and then we're going to come back to this. Here's one of the other accounts that we trade, okay? And we started with $5,000. Now this account had a balance of $43,000, but we still started with $5,000, and we started the same week, and we took in $17,000 of profits for the quarter. Part of that is the rapid action that we take on some trades that we can't do through an alert service, and part of it is we do have a couple of other more advanced strategies that we'll use in some of these accounts that we don't use through the Profit Builder program. But those are all things that you have an opportunity to learn down the road when perhaps you're ready for a little bit more. But first of all, this result is huge, and I don't think any of your friends and family are doing that, I would guess, at 127.9%. This result is even better at 346% for the quarter. So it's just a difference between taking independent action versus kind of waiting for somebody else to tell you what to do. So don't get lost in the other number. the bigger number. Focus on what you are doing and know that you've got a tremendous amount of upside potential beyond that if you continue to learn and if you apply the discipline to learn. Now, I want to share with you how we're going to communicate this to you. So here's our standard trade alert template. In fact, this is the trade alert that went out today where we opened the July week 3 Iron Condor. We've added a new field at the bottom of the trade alert. And this is where it's going to require you to do just a little bit of thinking when you look at that trade alert. And I don't think it's going to be complicated for you. I think it's going to become second nature to you to know what you're comfortable with. But we're adding a field here that says weekly risk. We're going to tell you how many contracts we are opening. And we're going to tell you that the number of contracts we are opening is based on this weekly risk. So this note, these two notes in here will always be in here, and this weekly risk is going to be updated every Monday. So we will tell you at the beginning of the week, it'll be on every trade alert. We're opening contracts based on this position, these 5 contracts being part of our weekly risk. And what you should do is to adjust the number of contracts based on your risk being higher or lower. So I've heard from some of you that you're interested now that you've gotten involved in the program and you've seen the success and you're enjoying it. You might like to increase the amount of capital that you put into this program. Well, let's just say that you decided you want to put $15,000 of risk in a week. It's very simple. We're trading 5 based on 7,500. You might want to trade 10 contracts if you're trading 15,000. Let's say you're just starting out. You've really just joined us and you are starting with your initial allocation of $5,000. And you get this trade alert and maybe we have 6 contracts and it's based on 7,500. Well, you might want to trade only 4 contracts if you're only trading $5,000. So if you're trading $5,000 and you divide that by 75.58, it's 66%. You're basically trading a base capital amount that's 66% of what we're trading. So if I apply that to, let's just say we send out an alert for 6 contracts, you would trade 4 contracts. Or if we send out an alert for 5 contracts times 66%, that is 3.3. It's up to you then whether you want to round to 3 contracts or round to 4 contracts. So we tried to make this as simple as possible. I mean, it's a common theme in this whole program, was we're trying to really keep it simple, not overwhelming, not difficult to understand. Sometimes when you're just starting out, it takes you a little bit to kind of grasp the whole flow of things, but that's fine. Then you get into the routine and you understand what we're doing. So that's going to appear on each trade alert now. That's going to show up and you'll be able to calculate how many contracts you want to trade, either greater than or less than that. We won't always have the weekly amount in play. As I said, we're going to always use our wisdom based on what we see the market doing, based on contract opportunities, position opportunities. We're going to use that first. We always want the market to tell us what to do. I'm never going to force myself to put 75.58 of risk capital in play if I don't have positions that I like. And that's why we're going to have some weeks that are greater than others and some weeks that are less than others. Okay? So that's what I wanted to share with you. And now I'd like to go to questions that you might have. I do ask that your questions be related specifically to this program and how to best be successful with this program. And I'm just giving you an example. Frequently when I'm doing promotional webinars, I'm doing free webinars, I'll get a question similar to this. Like, why would you do that and not this? And my simple answer, I rehearse in the mirror, trying not to be sarcastic about it because I really don't intend to be. But the simple answer is this: because what I do works. That's really as simple as it is. Because what we do works. Okay? All right, so I'm going to start at the top. I'm going to go through questions. Let's see what kind of questions you have. All right, James is asking, he's got a three-part question here. All right, I'm going to have to read this these three chapters here. Please briefly explain the risk of letting positions expire. Well, James, the risk of letting positions expire can best be described by looking at the chart. Let's look at the chart. We've got the NASDAQ 100 here, okay? Depending on how far out your expiration is, you're going to go right up to expiration. What if this move that we had yesterday had happened right at expiration? And what if you held put spreads? What if this move right here had happened right at expiration and you held call spreads? You see, these indexes cycle so much. You are almost always going to drive greater profits and less risk by taking a 10% profit based on the gross, or 10 to 15% profit, than you will be by holding the position. We put our positions out 2 to 4 weeks. If I can take a profit tomorrow on this, why do I want to sit tight and try to hold for more on that position for another 2 to 4 weeks, when I can take that same capital and put it back into another trade, and that new trade is going to be positioned based on where the market's trading now, not where the market was trading a week ago. One of the failure points, one of the key failure points for people who trade credit spreads is doing exactly that, trying to carry the position all the way to expiration. First of all, it's nerve-wracking. There's a lot of anxiety and fear. These markets move so much. Why would you want to do that? At one point, you think you got a profit, and the next day, all of a sudden, evaporated. And by the way, this is a 187-point range that we've been down in and up in and down in, and et cetera. So hopefully that answers your question. Second part of his question, please advise the best way to increase capital allotted to trading like this. I think I just talked about that. I would start by increasing the number of contracts, followed by an increase in small increments. You don't necessarily need to go from 5 contracts to 10 contracts, 5 contracts to 7 contracts, 8 contracts, whatever. And then after that, I would increase the number of positions using the same indexes. And then after that, you could start widening the spread. But that'll be down the road for what we're going to be guiding you through. Is there some number of contracts that maybe is a maximum reasonable limit? Yes and no. I mean, the fewer number of contracts you trade, the better off you are. I prefer to keep my contract count low. I'd rather have more positions at different strike points entered on different days after movements than I would increase the number of contracts. And I've traded as many as 1,000 contracts on SPX before, but it's just, it's not practical. If you're trading 50 contracts, that's not an unreasonable number. All right. Peter's asking, today we placed a GTC order to close the RUT iron condor. We placed it on the whole position. Could you have put 2 GTC orders in on each side of the condor, one on the vertical call, one on the call spread, and one on the put spread? Sure, I could do that, but that's not going to function the same as placing a closing order on the iron condor. You see, if I place a closing order on the iron condor, I don't care what the value of all the 4 legs are. All I care is the net value of the 4 of them together. It's possible that my iron condor could actually be showing me a profit of 10%, but there might be a loss on one side of the trade or the other. If you place your closing orders on either side, you're going to close out one side, but you won't be closing out the whole iron condor. So, you know, when we are uncertain which direction things are going to move, or we don't see an opportunity to favor one side or the other, then we always place our GTC on the iron condor. Okay, breaking news just came across. Greece defaults on payment to the International Monetary Fund. We'll have to see what happens tomorrow. This should be fun. All right. Hey, thank you, Randy. As always, happy to be here. I appreciate you being here, Randy, and being part of our program. Okay, Alan is asking, how much do you pay attention to fundamentals and daily financial news as part of the system? Frankly, despite the fact that I just saw that news flash come across my iPhone, I really don't pay attention to any of it, Alan, and I'm going to go back to the chart and explain to you why. When we saw this move down, now on the outside, it looked like, from the outside looking in, that looked like it was a result of Greece and fears and trembling and panic and what's going to happen and blah, blah, blah. But if you didn't know any of that was going on, all we saw was the index move down to its natural level of support. And we kind of knew that was likely to happen because it had been trading at a level of resistance and at the upper Bollinger Bands. It's as simple as that. I can't go back and tell you now why NDX jumped from the 6th of June at 1 hour into the market day from a low of 43.92 to the 11th of June to a high of 45.11. I can't tell you why that happened. What I can tell you is there was a Bollinger Band snap, and we snapped back up, and we moved right up to the upper Bollinger Band. That's all I can tell you. I can't tell you why we had a big sell-off back here. I can't tell you why we gapped higher here. But what I can tell you is that we've traded in a range. We always trade in a range. And when we break out of that range, drop below support, or break above resistance, then it's up to us to figure out what the next cycle is. And sometimes that takes a little time. But when I have a long-term pattern like this, which I didn't adjust this channel line, the support yesterday at all, we came right down to support. And what did we do today? We moved higher. I don't know where we're going tomorrow, but maybe we're going lower. That's always possible. If we go lower because Greece defaulted, then I've got another level of support here. I can't tell you that I look at anything beyond that, okay? Most of the news is irrelevant to me. I used to have a TV on with financial news all day long while I traded and just found it to be obnoxious and annoying. Those guys fill the space between Lexus commercials. All right, one of the worst days of the year for the market yesterday. One of my best. Thank you, Randy. You're welcome, Randy. I hope you're learning, and you know, we can get on either side of the market. All right, Robert's saying, great 2 months, was able to exceed my goals, but more important, able to follow and handle 3 of 4 managed trades, and yesterday 4 did not matter. All right, good job, Robert. Thanks for sharing that. All right, let's see here. On today's SPX position, you chose the 2100 strike as the risk point. Depending on which time period you use the SPX chart, the risk point could be above or below the Bollinger Bands. Which time period do you use the most to determine strikes, and why that one? You know, David, I appreciate bringing up that question. Let me pull up SPX's chart. All right, so 2100, when you look at the daily chart, Yeah, 2100 doesn't look really good relative to resistance or relative to the upper Bollinger Band. But 2100 was 35 points out of the money, and just based on my experience, 35 points is a pretty good forgiveness factor on SPX. I also am fairly confident that if SPX moves up, it might not move up all at one time. It might cycle its way up, cycle its way down, and we might have opportunity to take profits on the put. I was partially influenced by the fact that we weren't just opening a pure call spread, we were opening an iron condor. So I've got the advantage of the put to give me a profit on the other side. And if I go to a shorter time period, which I, by the way, use dailies, I use 60 minutes, and I use 10 minutes. Those are my three primary time periods. 2100 on the 60-minute is certainly still below the Bollinger Bands, but it's starting to get up there. I will say that 2100 is not a perfect and ideal scenario, but I liked it as part of an iron condor. And this was also an iron condor that we took $3.30 of credit on. So we only have $1.70 of risk. And then the 10-day, 10-minute time period, we certainly need to get above that. But these bands on the 10-minute get pushed more significantly. But there is a line of resistance now in a pattern that we established today. There is the 3 standard deviation Bollinger Band at 220.77. So 2100 was partially based on the amount of movement that would be required, partially based on the 10-minute, 10-day, 10-minute Bollinger Bands. That's how we chose it, and 35 points out of the money. I think, Peter, I answered that question in the first part of the session. Just in summary, people are at different stages of the program. We're going to be communicating the risk that we are taking on, and each person will have to calculate how much risk they want to take. But we're telling you exactly what we're basing ours on. And we'll see whether or not we're going to increase beyond 5 contracts. We're not opposed to doing that, but more importantly, it's all about how much risk we want to put in play and how much profit we actually have in queue. Now, I talked about that today on the daily update if you haven't listened to it, but if you just take a look at the potential profits we have based on our good till cancels, or we will place a GTC tomorrow on our iron condor, but we go in at 25%, 50% of our credit basis. Hold on just a second. I'm missing a couple of columns here. I'll put those back in. All right, so we set our GTC generally around 50% of our credit. So if you just simply go through and do a calculation and say, well, how much credit do we have and how much profit would we have if each of our 4 positions were filled at the GTC, we'd have $1,980 of profits. So we've got almost $2,000 of profits in our queue. If I go look at my spreadsheet, well, to continue to be on pace here, I need about $600 of profits, okay? I need $600 of profits. Well, I've got 2,000 in queue. I might be able to accomplish that with what I've got. It just depends on how the opportunities are presented to us. All right, Dale, I appreciate that. Thank you so much for being here. I love the program. So glad I found you. I really do appreciate you being part of it. One thing Dale is hoping to learn is how you add the channels and resistance bands. You know, I'll start talking about that a little bit more on the daily updates. There's not a lot, it's not complicated, and it really just becomes a matter of you training your eye to kind of see the cycles. I mean, I think you all could see that we have a whole series of lower lows right here and lower highs. I just want to put a channel around that to identify that for myself. And by having those channels out there, it helps me have a better gauge of when we're breaking below or when we're breaking above. The most important channel for me to monitor throughout the day during our live trading, in our live trading room, is the most current cycle. Now, I kind of waited through about 3/4 of today's market day and identified that we had 2 tops and 2 bottoms here, and that gave me this cycle. Now, I'm not saying that this cycle is going to last, but it helps me determine if I start moving significantly above the top of that cycle, then I know we're breaking more to the upside. If I move through the bottom of this support, then it's likely that we're going to start moving more to the downside. It just gives me one more clue as to which direction we might be moving in the short term. And that will have an influence on the positions that we trade. Well, Lawrence, thank you very much. You're the only presenter of this type material that puts his money where his mouth is. Following your methods, I'm up $4,877 and started after the quarter started. Wow, that's huge, Lawrence. I'm so excited for you, and I take a lot of pride in what we do. And the only thing that I really get out of it, other than making some money, is I like knowing that you're making money and you're enjoying what you're learning. Okay, Rohit is, see, awesome service, been a client for less than 2 months. I've had a huge amount of success working with a slightly larger account, but total profits in the last 2 months exceeded $50,000. Hoo-ha, that is awesome. Now, I'm going to say congratulations, and it's entirely up to you. I don't need to know the size of your account. What I sincerely, sincerely hope is that you're being very, very wise about how much of your total account you're allocating. Okay, things are going very well. You're going to have losses periodically. You're going to have a weekly loss here and there. Just please, please, please make sure that you're not overextending your capital, and only you will know whether or not you're doing that. But that is just phenomenal. $50,000 in 2 months, I would say, is pretty incredible. And I appreciate that. So we could use that as a testimonial. So thank you. On a bear call spread, Richard's asking this, would you explain each leg as to what it does and what we are protecting or not wanting to see happen? Okay, so a bear call spread. A call spread is a call vertical spread. We don't have any open right now, but if I were to just go to the options chain here and pull up an NDX call spread. Let's see here, July monthly, we closed today at 43.96. Let's just say we wanted to go up to 44.50. I'm not actually choosing these strikes based on anything other than just to show you an example. If I set up this trade to trade a 44.50, 44.55 call vertical spread, basically what I want to have happen is, sorry, this should be a sell. All right, we're going to sell the 44.50. I want NDX to stay below 44.50. If we allowed this to go all the way to expiration, which I think you already know by now I don't, but if we allowed it to go all the way to expiration and the index was trading and settled at 44.49, we would have a 100% win. All we need is for the index to stay below 44.50, even just by a penny. If it moves above 44.50, that's when we start to incur a loss. If we opened this for a credit of $2.25 and the index closed at 44.51, we would have a $1 loss on our 5-point spread. But since we had taken a $2.25 credit, we would actually have a net credit of $1.25. Your actual loss starts to kick in once you get above the strike plus the credit that you took. So the strike plus the credit that you took in is your break-even point on a credit spread. Anything above that, if you just let it go, is a loss. And if the index is at expiration above 44.55, in that case, you have a full loss of 5 points on the spread. You have a full loss of 5, but you took in a credit of $2.25, so your actual net loss is $2.75. All right, Callum, I appreciate you saying that. These sessions are invaluable. We're going to schedule these periodically. I'm not sure what your question is, Billy. How did yesterday's spreadsheet look like? Are you asking what our profits were yesterday, what we reported yesterday? We only update our spreadsheet once a week. If you can tell me clarify what your question is, I'll be happy to try to answer it. Are we changing projection from 12% to 8%? That's still very good. No, our projection is based on what our actual is generally, okay? In this account, because as I explained earlier, we are influenced by when we send out the trade alerts, and sometimes we defer action, and et cetera, and you're always going to do better when you are making your own decisions. But we've actually achieved an average weekly return of 6.5%. Now that's a little bit less than what we do in our other accounts, but I'm projecting that we're going to increase that, and it's going to probably be closer to 8% for the next quarter. In our other accounts, our actual is about 12% and projected is 12%. We've got the one account, I have one account that I tend to be a little bit more aggressive in, and this is all a matter of now understanding what you're doing. So you're in phase 1 of learning what to do. Phase 2 is doing it on your own and making executions, so maybe you can graduate from 8% to 12%. But then I have one account that I tend to be a little bit more aggressive in, may take some more aggressive trades that I wouldn't alert because I know what I'm doing and I'm willing to take the risk. But in that account, we actually averaged for the quarter 17.9%. So I'm going to project 16.5% because it might be a little bit less than what we actually did for the quarter. But our focus is on this right here. So we will adjust the projection based on the actual. Right now, I've got the projection a little bit ahead. When we talk about a 12% return, that's kind of a blended average of everything that we do. Nearly 18% in one account and 12% in another account, and then 6.5% here. And one last follow-up comment to that, please feel free to project whatever you want, but never use the projection as a basis for making decisions on your positions. I don't look at my spreadsheet and say, well, I've got to hold on to that position because I need another $200 or I need another 2%. That is where you're going to start to fail, because the market is saying, look at me, pay attention, do what I'm telling you to do now. Don't do what your spreadsheet's telling you to do. Just let the spreadsheet record what the natural outcome is of your trading. When repositioning a trade, is there an advantage to waiting closer to expiration to allow more time to expire? Kristen's asking that. There's really not an advantage to waiting, although I typically, Kristen, will wait until expiration week to do a reposition. And sometimes, in fact, recently I had a position and we waited right until expiration day. That is very unusual for me to decide to do that. But I was speculating a little bit, and I was looking at the chart, and it turned out that we ended up having to manage that position anyway. I would say if you get into Monday, Tuesday at the latest of expiration week, and your position is in the money, so you have price pressure and you have time pressure, you need to take action. You need to go ahead and take action. Bill's asking, that's 330 total credit on this trade. Yes. If you're talking about the SPX trade that we opened today, yes, we took $3.30 of credit on the entire iron condor. Well, thank you, David. I appreciate that. Thank you, thank you, thank you. Appreciate that so much. Alan's asking, what program do I use for charting? I've used this program tool forever, and it's called Profit Charts. You can see at the top of my screen here, Profit, P-R-O-P-H-E-T, Charts. Profit Charts is owned by Invest Tools. They're actually one of my competitors, but that's okay. They've got great tools. They're owned by Invest Tools. So if you want to subscribe to it, you can call Invest Tools and pay a monthly subscription. Profit Chart, Think or Swim trading platform and Invest Tools are both owned, Invest Tools are both owned by a TD Ameritrade. If you have an account with Think or Swim, this is the charting package that they offer free as part of holding that account. Let's see here. When we do a reposition or a rollout, would it be possible to show the closing trade separate from the new positioned rollout trade to make it easier to follow the math? Actually, I believe, Rhonda, that the easiest way to follow the math is to look at the consolidated trade, because all we care about is what the net credit or net debit was on the rollout or reposition. And you can certainly go back and look at the history on the individual legs, but that just makes it more complicated. If I roll a position out and I do it in a 4-leg transaction, closing 2 legs and opening 2 all in one transaction, and it costs me 30 cents, I don't really care necessarily all the other parts of it. All I care about is it costs 30 cents, and I compare that to my prior net credit on the position. We also are trying to keep the alerts as simple as possible because we strive to get them out to you as quickly as possible. So we don't want to start adding a lot of detail on the alerts that we could cover in the daily reviews or that you could just go and grab out of your history. You know, I love when I see messages like that. Marvin says, Mark, thanks to you, in 8 weeks, I'm $8,000 richer. Very pleased with the program. 80% return. Well, thank you for sharing. I appreciate that. All right. Bill, I know I told you, I'm sorry, I really apologize. I know I asked you to clarify your question, and you said the trade is on the SPX. Now, I don't remember what the question was. Sorry, I'm just kind of going through here quickly. All right, on a strong day like yesterday when futures were down hard overnight, would it make sense to go in pre-market, analyze, and if warranted, adjust one of our 50% buy to close orders for more favorable profit on the opening bell? Absolutely, John, absolutely. And we will sometimes do that. So what John's saying very simply is we saw that overnight futures were pointing to a pretty large gap open. If we had our GTC set to close at 50% of our original credit, we might be able to close it at only 30% of our original credit. So yeah, you can do that, and you might be able to take more profits in doing so. How do you decide how much risk to put on for a single trade? I'm generally taking my total capital allocation for the week and dividing it into generally 4 or 5 parts. Let me see how I can get through some of these. Is it possible to show us how to go to the option table and buy an option? Somehow can't complete the process. Have trouble when I have to change the limit price. Okay, so let's just take a look at the trading platform here. We're going to go to the options chain. If I'm opening a spread, like I did on that NDX 4450, okay, I'm just going to click on one of the legs. I'm going to click on one of the legs that I want. So as soon as I click on it, it brings me up this box, and then I just say I want to create my spread. I can either create a custom spread or I can create a vertical spread. If I create a custom spread, I've only got one leg out there. I know I need to add the other leg. I'm going to add a call, change this to a sell, and change my strike. Now I've got my my price. I look at the mark, it's 225. I create my order, and I set my limit price in here. It almost always, frequently, I guess almost always and frequently is the same, defaults to a debit, but you're not trying to open this as a debit. So zero that out, put in 225, click enter, and make sure that the message says this is a credit. And then you're good to go. All right. When you close a trade 4 hours before expiration, who's on the other side of the trade? Who's opening that trade that expires 4 hours later? Well, you don't know that they're opening. They might be closing. You're buying to close one leg and you're selling to close one leg. You're selling to close, somebody else might be buying to close. There's all sorts of different transactions, and it's not worth spending any time trying to figure it out because it's not going to help you actually trade. Yes, Mike, the risk point on any individual position is always the leg that you sold to open. It is always the leg that is closest to the money. It is the leg that you sold to open. So in the example I was just showing on NDX, the risk point is 44.50. It's the leg that I would sell to open. Tim, I don't have a specific maximum number of contracts to be traded. We're trading some of the most liquid markets in the world. Granted, that's not always true on individual option legs, but the way we're trading, the way we're going to continue to trade and grow and reset at the beginning of the quarter, it's not something that we need to be concerned about. If I ever felt like we were running out of contract capacity, we would do other things like widen the spreads. Okay, when the market moves adversely and the short leg is in the money on the last week, and rolling is not possible, well, rolling is always possible, and it's always going to be your least expensive alternative. Um, too much debit is required. Generally, rolling is going to be the least amount of debit that's going to be required. Is it advisable to convert the position to iron butterflies? Okay, we don't trade iron butterflies. It's not our strategy, so that's something that you can figure out. But I will just tell you that rolling out is always going to be the least expensive management tool you have. What market factors do you use to add more risk in play? What market factors add more risk in play? I think we already talked about that. We'll widen the spread, we'll increase the number of contracts. If you are trading a bigger account and you want more positions, then one approach would be if you open a position on SPX, for example, and you pick a strike that you like, put that position in play. And then pick another strike, which is further out of the money, and put a second position in play. You're going to have less of a credit on the second position. You'll put some additional risk in play, but you've got a bit more capital in play without betting it all on one trade. On an iron condor, what's the amount of credit you look for? No credit spreads is between $1.20 and $1.80. On an iron condor, I like to be between 250 and 330. I think that's pretty reasonable to get generally on an iron condor. How transferable is this system to other indexes or even individual stocks? Well, you certainly can use it on individual stocks, but then you take away the European style expiration, which is, I think, a key part of us being able to just sit tight on a position even though we're in the money. Look at the positions that we have right now. RUT is at 1253. Our risk point is 1260 on our put. SPX is 2063. Our risk point is 2070. We've got 4 weeks to expiration. We've got 3 weeks to expiration. I go to bed at night and I don't worry about waking up to an unexpected exercise. So that's one of the reasons we don't do many stocks. And if you're looking for other stocks, if you're looking for stocks that have European style, you'll have to research that on your own. There is one other index that we will periodically trade, and it is OEX. OEX is the S&P 100, but pay very close attention to this. OEX is an American style expiration. If you want to trade OEX and you like it for some reason, XEO is the European style trading for OEX. So you can trade European style. Do you have a rule of thumb for setting wings on the iron condors? Very, very simple rule of thumb, which is not always the case, Ward, but it's what we try to follow is we want our wings to be outside the Bollinger Bands and outside support and resistance. I often do not get the same fill on opening a position as you. Should I use your recommended close amount or should I just, that's entirely up to you, Fran. If you want to close out at the same time as us, just to stay in sync with us, you might have a smaller profit than us, but that's okay. You're kind of learning the process here. There are going to be trades where you're going to get a better fill than us. I mean, I was kind of surprised actually today. We had no sooner sent out the trade alert on this SPX Iron Condor that we filled at 330, and the mark was at 365. So I know there were people that got better fills. In fact, in the live trading room, there were people that were getting filled at 345 on that. But you just have to use your own judgment, Fran, if you want to follow along with us and take a little smaller profit, or if you want to hold out for the same type of a profit. Okay. Rabinder is asking, is it till it reaches 1 million or till some period like 1 year? If you're talking about our growth, we're just going to grow until we get tired of growing. And I'm not sure when that'll happen, but you know, we've got projections out to a year, out to 2 years. If our current projection of 8% held true, if our reallocation at the beginning of each quarter held true. Those are big, big, big ifs, okay? So don't get too hung up on that. But end of next, not next year, where is it? End of next year, we could have accumulated $446,000 of profits, but I don't look at that. I look at what we have and what we're doing this week. And if it's meant to happen, it'll happen naturally. Do the indicators you use on your charts adjust automatically? Yes, the Bollinger Bands are the only actual technical indicator we use, and those are based on an algorithm, and they do adjust automatically. The support and resistance channels are put there by me, and I adjust those as I see the market move. If I have a declining channel and we break below that, then I start looking for how to form a new channel. So just to confirm, we set our debit to sell to close at 50% of credit. All right, well, let's make sure we use the right terminology. We're actually buying to close. When we opened the position, we sold to open. Now we're going to close it, so we're going to buy it back. And we generally set our GTCs at 50% of the original credit. Concern is that sometimes an alert may not come for a couple hours. Is there a general rule of thumb about timeliness getting an alert and entering the trade? Not generally, Eugene. I mean, there are going to be times that you might miss out on a trade, and there are going to be other times where you're going to have a much better fill. And there are a couple great examples of that. I understand that there were a lot of people that were not able to get into the put spread that we opened. I think it was on Friday. We took a credit of $1.40, and we said in the alert, we suggest you not work it below $1.40. What happened yesterday? I mean, people were getting into the trade for much more than our fill, and it was a day later. Today, we alerted this position. Right now, it's pretty much right on par with where we got in, and it'll be interesting to see what happens. So there are going to be some trades that you're going to get less favorable fill, and other trades that you're going to get a more favorable fill. James, I appreciate those comments, really do. Okay, so talk to some of these questions. I think we've already talked about. Well, I like hearing that. Shoaib, never had 25 to 30 trades that I closed with a profit on each of them. Almost find it too good to be true. And that's when you don't question it. You just focus on, where's my next trade? Am I following the rules? Am I following the rules of evaluating with my 3-question process every day? And if the answer is yes, then you just keep on doing what you're doing. And don't ever, ever, ever overextend your risk, please. That's the number one thing that gets people into trouble. Some of you will have great success trading your 5,000 and immediately want to put 50,000 in or 100,000 in. That's your choice, but please don't do that. Just, if you started with 5 and you have the capacity to put in 50, maybe up it to 10 for the next quarter. You might actually find that you sleep better having practically no risk relative to your total portfolio size, but you're still making a lot of money and you're growing. Is it okay to place my GTC closing orders for newly opened positions during after hours, since the order won't really hit the books until the next trading day? Generally, as a rule of thumb, yes, but I'm just going to wait until after the extended hours are done, and then I'm going to place my closing orders. I usually don't even place them the same day. The next day, when I'm starting to do a position evaluation, we're in the live trading room. Allison and I are looking at positions together, and I just go through and decide what I want to place, and then she places a closing order on across all of our accounts. Notice you don't use option house charting. That's because I've always used the same charting. So I don't have the charting capabilities. Wouldn't I be better off to keep getting your alerts? Absolutely. You're going to learn from the alerts. Again, I'm going to repeat this because I do think it's important. The biggest drivers of me choosing strikes on new positions are I look at the daily, I look at the 60-minute, and I look at the 10-minute Bollinger Bands. And I want to try to get outside those as much as possible. Then I also look at my support and resistance. So if I can get outside of resistance or above resistance or below support, then I'm going to try to do that. But the Bollinger Bands are key for me. I don't 100% of the time do that. And that was evidenced today on the SPX trade that we did. But I placed on SPX the strike, the risk point at 2120, or I'm sorry, 2100. I placed it well up into the channel, and we're trading right at the bottom of the channel. So we know that there's got to be an upcycle. That one might be a trade that we might need to manage, but for $3.30 on a credit, it's worth taking a little bit of risk sometimes. All right, let me skim through some questions because I want to make sure I touch on any topics that have not been discussed yet. Yep, we talked about charting. Curious to know how long you've traded these Bollinger Band snap strategies. Probably started trading it extensively 5 or 6 years ago. Oh, Gabriel, appreciate that. Thank you. I appreciate that. Let's see here. Charting technique. Since the channels are central to your analysis, what are all the time frames you're using? Okay, we talked about that. Daily, 60-minute, and 10-minute primarily. Well, I appreciate everybody's very positive comments. You know, we work hard to try to deliver not only profits, but a good service. So I do appreciate what you're saying here. All right, let's see here. You know, if you have questions that are on a completely different topic that I didn't get to tonight, send me an email. I am traveling for the next couple of days and I might have less time for emails, but if it's not a pressing question, you know, just kind of it's a curious question, I will get to it eventually. When a position is threatened, I try to figure out what management you would do. It's been difficult so far. Yeah, but you're fairly early on in your subscription. You'll learn that. I always look at doing a reposition first within the same expiration week. And then I look at doing a rollout. The rollout is going to be the least expensive. So it's influenced by capital, and it's influenced by whether or not I think I could just nurture this along for that particular expiration period. Okay, Barry Burns, that you exposed us to, yes, partner, describes that the markets sometimes behave chaotically and not in a predictable cyclical manner. Does this perspective effect play into your chart interpretation? Absolutely. We count on chaos. If there was no chaos in the market, you wouldn't have a market. We want chaos. We want moves, and we want to play them accordingly. We're not going to always be right, but using our methods, we have a pretty good track record. We have an iron condor with a $3, I think you meant a $3.30 credit. Does that mean if you did nothing, you can't lose since your exposure is only $1.70? Well, no, you can lose $1.70, Dwight. Your loss is actually $5, but since you took a credit of $3.30, then you're exposed to a net loss of $1.70. All right. All right. I'm being quiet here just for a minute because I'm just scanning for topics that we haven't talked about. We talked about European indexes. Okay. Going through, I really appreciate everybody sharing their phenomenal results with me, and I don't want to bypass them, but we're starting to run out of time, and I want to see if there are any other questions. Okay. Please remind us how much is your oops factor. You look at Bollinger Bands and also have a rule of thumb for spread of current price. You know, as a general rule of thumb, if I can be 20 to 35 points out of the money on SPX, and if I can be 20 points out of the money on RUT, and if I can be 50 points out of the money on NDX, those are very, very broad guidelines, but they don't matter in a standalone. They only matter relative to where are support and resistance and where are the Bollinger Bands and what time periods are those Bollinger Bands on. Fran's saying some other surfaces don't adjust, they just absorb the losses and let the high percentage win rate produce the profits. Your thoughts? Those other services are not what we're doing. And our adjustments work, and we win successfully with those. After trading different strategies, including currencies, this is sleepable by far. And loving it. Okay, that's great. That's great. This is all being recorded, so you'll have a chance to go through it again. Have you used Thinkorswim platform? I have in the past. I think it's way, way more than any simple trading strategy requires. But it's mostly whatever you're comfortable with and whatever you have learned how to use. I love the Option House trading platform. Allison trades on Options Express. She trades at Thinkorswim. So between both of us, we're trading all three platforms. But you know, it just depends on what you're mostly comfortable with. Do you take out the estimated taxes before adjusting the allocation? Absolutely not. This has nothing to do with a tax. This just is accumulating profits, and at the end of the year, I'm going to give it all to my CPA, and they'll figure out what I owe. Ron's just saying, appreciate the simplicity of the 3-question process. Thank you. We are trying to keep things as simple as possible. Trading doesn't need to be complicated and doesn't need to be overwhelming. This is a good point Brian's bringing up. Using profit charts, I notice when I put channels on a day chart, then switch to an hourly chart, channels are not aligned in the same spot. Is there any way to fix that? You'll have to talk to the profit chart people at InvestTools about that. But I've noticed the same thing, and it's more important to me to have it on the time period that I want to evaluate. And if I back out or change the time period, I'm not really concerned about it. By the way, made $3,000 yesterday. All right, Brian, you go. I listen to your recorded broadcast. Is it possible to listen to you when you're live and speaking the broadcast as you're speaking it? No, not right now. We're not trying to set up a webinar where we have people in doing that. I host a live trading room the first 2 hours and the last 2 hours of every trading day, and then between those two sessions, I do a full analysis of our positions and do that recording. So it's really just designed for your education. Tim's asking, how does someone join the live trading room every day? We have a subscription for that. We have a limited audience that we have in there, but if you are interested, shoot me an email. But the price is $995 a month. We do provide a discount for a 3-month subscription for $2,500 for 3 months. Missed the alert yesterday to open the RUT put spread. Opened the position today at $2.15. Let's see, did we open a put spread? Oh, yeah, the put spread that we opened on Friday. Yeah, you got a lot better fill. We opened it at $1.40, and you opened it at $2.15. All right, Patty. Wow, it's a very nice projection. Looking to retire. Good for you. Hoping to host a live event next year, maybe in March, April timeframe. And maybe if you guys are interested in attending, we can celebrate a lot of things at that time together and find a few other things that you might be interested in learning. Let's see, you may say try to get a credit of 280 and work the trade, but no lower than 220. How do you decide where to put the limit of 220? It's just based on how we see the trade playing, Robert. I mean, you can certainly trade for lower than that. It's still a good credit, but it's generally that we have some parameters that we want to trade within. If we like the trade at 280, we might still like it at 250, but depending on if it's an iron condor, how much movement is anticipated based on the chart, that really just comes from experience and feeling comfortable with what you're doing. What markets are being traded in overnight futures trading? The futures. The futures markets are a market that trades 23 hours and 45 minutes every day. There's only a 15-minute period that the futures are not trading. And futures are trading on, well, every futures market has a different time period, but futures are trading on equities, they're trading on indexes, they're trading on oil, pork bellies, corn futures, they're trading on all sorts of stuff. What situation do you prefer to open an iron condor versus a vertical spread? Well, if I'm seeing that the trading is in the middle of the pattern, I'm generally going to open an iron condor. And that could be in the middle of the daily, the 60-minute, or the 10-minute pattern. If I'm seeing it trade at an extreme edge of the pattern, I'm generally going to open a put spread on the bottom of the pattern or a call spread on the top of the pattern. I made an exception to that today when I opened the SPX Iron Condor. And I made that exception for two reasons. One is I didn't feel as though we had, at the time we opened that trade, I didn't feel as though we had really established a definite confirmation of support, and we could just as easily still go lower as we could go higher. And the second reason I opted for the Iron Condor was I already had one put spread in place. So if I add another put spread, everything is biased to the upside. But by adding an Iron Condor, if we do go higher, I've got two positions in place, and it would make sense that I'd be wanting to play to the upside given where we're trading. But if we do go lower, I've got a little profit in the game to help compensate for possibly having to manage or adjust these other trades. All right, I'm going to take just a few more questions, and then we're going to close the session. We've been on for just a little under an hour and a half, and I really appreciate all the questions, and I think this is a great way for you to continue learning. And we'll continue to do this periodically. We have a July 15th vertical. Why don't we convert it to an Iron Condor since there's no additional capital required? This is also true with the July 24 put vertical we hold. Absolutely, and we will when we feel that's the right time. But I'm not going to do that right now with the index trading right at the very bottom of the pattern. So I'm looking for a little bit of a movement higher, and then we might consider doing that. If we don't get that movement higher, we might have to adjust these. But you know, you want to be careful about opening too much at one time. We opened an Iron Condor today with a call spread. We already have an RUT call spread in place. Let's just give it some time and see whether or not we get a bounce, and then we might actually open a call spread. Okay, just scanning here to see if there are any other topics. And a question using an Iron Condor and making a rollout adjustment instead of the usual reposition credit spread. Do you consider ever given the increased credit with the same risk? I'm not sure I understand that question. There would never be a situation where we'd have to roll out an Iron Condor, if that's what you're asking, because one side of the Condor would be profitable. All right. I think I answered that, but I'll say again, are you concerned with this grease business that could drop the market and mess up your put spreads? Well, what's going to mess up our put spreads? What would we do if the market moves lower? If the market moves lower, eventually the market's going to move higher again, right? And if any of you say, well, I'm not so sure about that, then just take a quick look at a chart. Whenever the market moves lower, the market moves higher. Whenever the market moves higher, the market moves lower. We just don't know what time frame that's going to occur in. If you go back to, we're going to change this 20-year view to a daily view, and we're going to go to 2007 to early 2009. I think we all know what happened during that time period now, right? We all talk about it, you know, it was the great big market sell-offs, and a lot of questions I get when people are evaluating our program is, what do you do during, you know, market collapse? Well, I'm going to say the market didn't collapse in 2008. The market cycled lower, and it just kept cycling lower. But during those cycles lower, it also moved higher. Okay? Here's a big move down. That was followed by a move up. Here's another big move down. It was followed by a move up. By the way, that move up started in March of 2009 and has not stopped since. But during that whole move up in the last 6 years, we've had a lot of down cycles. But despite the fact that we had all this sell-off in the market, you had all this moving up. That's what we're going to trade. So, Greece is going to figure out what they want to do. And if it affects the market, then maybe there's a sell-off. And it might mean that we have to manage or adjust our trades. Right now, I'm sitting on a put vertical spread on SPX that I've got 4 weeks to expiration. Look at any 4-week period in SPX and tell me that there isn't a significant amount of movement. Let's look at 30 days. 30 days. We've traded in a 70-point range. No, I'm not concerned about those. If we really got into trouble and saw ourselves heading lower and there's no chance at all ever in our view that we're coming back above 2070, we're going to flip-flop that trade. We're going to convert it to a call spread. There's always some way for us to win. That would cost us a temporary drawdown that we would recover when the call spread recovered. Or we would flip-flop it and add a new put spread further out of the money and turn it into an iron condor. There's just so many different ways to snag this, and it's one of the reasons why I don't bother listening to the news, because you're going to start trying to second guess what happens or what's about to happen, and you're not going to make decisions anymore about what's best for your portfolio and your positions. You're going to start trying to make decisions that are best for what someone else is telling you is happening. And that just is not, that's just not practical. So I've tried to capture as many of the topics as possible, and I apologize if I did not get to a specific topic. I've scanned through these and I think I've covered most of them. Just doing one last quick perusal here. All right, here's the last one. This is the last question. Mark's asking, please explain how you decide how much to roll out and or reposition. Kind of confused on this adjustment. I don't think you mean how much, I think you mean when. Because then when you decide that it's time, it's a matter of deciding which method of management you use. There are always exceptions to this, but as a general rule, if I got to July week 4 and my position is in the money, but I'm in the money by just a few points, like, I don't know, 3, 5 points, 7 points, and I'm looking at the chart, and there's a pretty clear indication to me that we might be heading higher, my first plan of attack would be, let me see if I can just reposition in the same expiration. Because if I can just push my strikes a little bit out of the money and we do move higher, then I've resolved that position, and all in that same expiration period, I would have taken a temporary loss, a drawdown from closing the position, and I would have fully recovered it all within that same week. But let's just say I hold this 2070 and the index has dropped to 2050, and I still see a strong bias back to the upside. Well, I don't want to count on it coming back 20 points in that expiration week. I might just simply roll it out because it's going to be the least expensive option I have to me, just rolling it out. And I'm just going to then wait. Might be rolling it out 2 weeks, 4 weeks. Depends on how far off I am from my risk point and how strong the indication is on my chart. So there are a variety of things that are coming into play, And what I sincerely hope is that as we do have to manage and adjust trades, that you will get more comfortable with that decision process on your own. All right, so let me just close tonight by saying I sincerely appreciate all of you being part of this program. It makes trading a lot of fun. I like trading. Allison and I trade together all day long, and we're in the live trading room. We've got a group of people that we just really enjoy trading with. But it's a lot of fun when I know that it's fun for me personally. It's gratifying to me when I know that there are people who have something that they desire to learn and that we can help you learn. We can help you achieve a goal that you have. If your goal is to learn how to trade in a simplistic manner and grow your account, then we want to help you as much as we can. I can't guarantee you that you're going to make money. I can never guarantee that in the market. What I can guarantee you is I'll do my best every single day to provide you an overview of what I see going on with the current positions we have, why I've selected the positions that I hold, and if at any time you don't like the position that we've recommended, please don't take it. It's not going to offend me. It's just a matter of you have to decide as a trader how much you want to follow along. But I'll explain to you why we're doing what we're doing. If you disagree with it, take a different course of action. The bottom line here is to provide you 6 months worth of education. And after that, I sincerely hope you decide you want to stay with us as part of our community and continue getting our daily updates. But that's something for you to decide, when your 6 month anniversary comes up. So thanks for being part of us. Thanks for being part of Options Moneymaker. I am sincerely considering scheduling a live event somewhere in the country next year, maybe a March, April timeframe. And it'd be a lot of fun to bring together our entire community of traders. And my objective is to plan a really great event that would add a lot of value to you and help you make a ton of money between now and then. So you won't even think twice about whether or not you want to attend. You just come. All right, that's it. This is recorded. Dorothy will send it out to everybody tomorrow. And again, thank you so much for being here. Really appreciate it.